What's up, everyone? We're going to go over a long-term time frame here for the S&P 500, see how much lower we're looking for the market to go right here. And what we're going to do is use a couple of different items I look at to trade. One of them is the Elliott wave, just using Fibonacci levels that I use to trade to try to see where the pullback will be. And then the other kind of ones will be two new setups that I've been looking at real closely here for the last 2 weeks and that I pretty much like. So we'll talk about those. So starting off here, we're looking at the daily chart here for the S&P 500. And as you can see, we just have a simple five-way move starting way back here. Back in was at March of 2009 at the low, very, very low, the financial crisis. And so how we got that, I'll delete this Fibonacci level right here. And how we got that is we just take this Fibonacci level, we go right here, and actually, it's going to be on the weekly chart because that's what I drew it off of. So we'll just go there. It's a lot easier to see. So start off there. We just take the low down here, and we go up to right there because this would be the first time when price retraced back to the 38% line right there. So that's going to be the first one, and then we take it up to right there, and now we're just looking for the second time the 38% line comes back and gets hit. Now it does get hit or close enough to be right here. But the problem with that is one of the main rules for the Elliott wave is the third wave cannot be the shortest out of the three main ones: the first wave, third wave, and fifth wave. So this one would have made the third wave the shortest, since, as you see, price continues to go up, so we couldn't use that. So we keep going up, and it's not until we have the COVID sell-off here back in February of 2020 that it came down to hit that. And so then we're just looking for the fifth wave, going up over there to get hit, and that looks to be where we are right now for the fifth wave, unless price miraculously makes a huge push back up over into about the 5,000s, creates a new high over there, and then we'd be looking for a retracement down. But for all intents and purposes, we're looking for that being the fifth wave. And so then from there, all we do is we draw the Fibonacci retracement level up to the top. And I draw it from using the second wave down there all the way up to the fifth wave. And now we're just looking for where this green box is. The top of this green box is at 38% level. So the minimum retracement we're looking for this move is going to be 33,054 and 50 cents. So currently price today is at 3598.75. So still a little bit more ways to go for this five-way move for me to consider it to be complete. Now, of course, the price can go lower than that. No, of course it can. No big deal. But this is just the minimum retracement level I am looking for this current move down here for the S&P 500 here on the weekly chart. So I'll go ahead and remove I'll just leave that on. That's fine. But yeah, that's what I'm looking for, and that's how I look for it on the five-way Elliott move. Then if we go to the daily chart, one thing we're doing for the Semaphore, I'm going to keep it on the weekly chart here real quick. But one of the new ways I started looking at the Semaphores right here is rather than using them to draw different points on, no matter which ones they were, red, 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 or red, yellow, yellow, or yellow, 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 is now treating them more like stop signs, meaning when a red one forms, well, that obviously means the move to the upside is over, so expect downside, and when one to the downside forms, that means the move to the downside is over, so to expect a move to the upside, the bottom one down here. Now these are all lagging indicators. Everything on here, the red line right here is just the let me turn this thing on right here. There we go. Sorry about that. The yellow line right here is just the 50 EMA. Blue line is the 200 EMA. And I'll talk about that here, how those intersect with the setup that I'm looking at here in a little bit. And so you can see here we have a red semaphore, yellow up here. To make a red, you have to have yellow because yellow is the second tier, the red is the primary tier, so that takes the longest one to form. And it typically doesn't form until after the move has started going away from it. So you're not going to get it to form right at the very low or on the very next candle. It's going to go away from it before it does form. I'll talk about another setup that I'm using that for right there. So as you see up here on the weekly chart, the yellow one has formed up here but doesn't have a red one yet. So that doesn't mean that we're expecting more downside to the market until a red one forms. So with the Semaphore, the last one being the red one, then yes, we're looking for, it could be more upside to the market, but it does look like it's moving down. But since we're on this fifth wave of the Elliott move right here, we're expecting this one to turn red here eventually, and that would signal the move down. So then what I do, one of the trade steps I'm looking for that I use is, this is a brand new one, and it is using the blue EMA and the red EMA. When you get one of the red semaphores that form, typically you're not going to have it until, because I'll show you real quickly from today, for instance. Using, this is Russell 2000 chart, the red bubble, the red EMA right here, it did not form until this candle right here, and this candle wasn't even complete, because I remember this morning when I was looking at it, I was waiting for it to form because the red one wasn't here, and it was going to eventually, but it wasn't formed yet. So it wasn't until I made a note of this, it wasn't until this candle right here, and then, like I said, the candle wasn't even completed when it formed. It was still going down and then came back up a little bit, but it formed right there. So then what I do is I look for is, after the red one gets formed, I look for the red EMA, the 50, to cross over the 200, which would have been right there. And then from there, you're typically going to get some more downside to the market here. As you can see, say the entry, we could have gotten in at the low of that candle right there. I mean, it still went down another, because the market's well, it's 20 minutes until it completely closes for the weekend, but went down another 20 points. So we're looking for more movement lower after the red one forms and it hits the red EMA. I'll show you some other examples over here how that happened. See, here's a red one right here. Here we have the crossover, not until right there, but then price continues to move up. Here we have a red one, goes. We get a spike crossover right here, and then price from right here continues to move up another 20 plus points. Still had that huge drop off the other day. And then you have crossover, red semaphore crossover right there. There's about the low, somewhere right in there, and still another 12, 13 points down. So this isn't something that's going to get you in at the very tops and the very bottoms. It just gets you in on par of the move for it, and it signifies that there's still a little bit more move down to whichever side it's going on. So with that being said, going back to the S&P 500 here. For the weekly chart, the red EMA has not crossed over the blue, still has some ways to go, and the red one hasn't formed up here as yet. But when the red one does eventually form, and if the 50 EMA crosses over the 200, then we'll look for a lower move here in the market. But based upon the Elliott wave, 5-way move right here, and the tracing we're looking for it, we're expecting a little bit more downside from this current move down here to the 38% line, which is 3354.50. So where it's at right now, almost about 36,000, we'll say, that's what, another about 250 points. We're looking for it to go down, and with the market going down, 82 points today, that could be done in another 3 days or so. It could be done by next week by this time. So we'll see about that as far as this one. So when that gets hit, I'll just remove all that off of there and consider that to be complete. But like I said, the price can continue to keep on going down. Of course it can. That's not a problem at all. And I'll start looking for a 5-way move here to the downside. Right now we don't have it. All we have is, there would be the first wave right there, but we wouldn't have the third wave, because as you can see, it came down right here, but then came and broke back into that second wave, which is one thing you can't have. You can't have price to come back and break into the second wave. So we have a new low, so we need price to retrace up without going back to the second wave right there, and then come back down for a 5th wave right there, for something like that. Not saying that's going to happen, but that's the way to have to work out there for that one to be a 5-way move. So that's what we're working for. That's what we are looking for here. Let me put some of this stuff back on right here. There we go. For the S&P 500, and then for talked about the EMA crossing over. So when the EMA does cross over, the 50 crosses over the 200. If it does do that, then we're looking for even more movement here down to the downside, wherever that happens, if it does happen. And of course, there has to be that red semaphore up there, but we're still a little ways away from the red crossing the blue, plus the red one has to form. So until that happens, we'll wait for that one. And then lastly, the setup we're looking for is, what I used to do is I used to draw this off of 3 semaphores. Like I'd use red, 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 or I'd use yellow, yellow, red, or yellow, yellow, yellow. But now the way I'm doing it is I think this way is a whole lot more accurate because it worked a majority of the time, vast majority of the time it did. But the times it didn't work, it was pretty bad. It went away from you pretty quickly. So what I found is using these red ones as more stop signs, like this bottom red means, we're expecting price to move up. The top red means, the top one up here means we're looking for price to move down. So all I do is I just draw I use the inside pitchfork here, and I just draw it from the red dot to yellow, and then we look for it for right there. Now this one doesn't work 100% of the time either, but I do find it to be more accurate than the other one I was using. But with the first example I'm fixing to show right here, it doesn't work out. It's a losing trade. So using this one right here is what I look for in this trade is after we get the three dots right there, that's a red, yellow, yellow, or yellow, 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 because yellow has to form first for red to form first, is I look for price to break out of the green channel right here, and all these numbers are right here. It's a 23.6 Fibonacci number, blue 78.6, and the white line is 1.618, and I'll talk about those here in just a second. What I'm looking for is price to break above the green, so it does right here. Just draw a little circle right there. Price breaks above the green, so that'd be the entry point right there. Then the exit is going to be the white line somewhere up here, 1.618. As you can see, this one, it never went up there and hit that. You did get, decent gain right up here. But the stop loss where I have for it is below the blue line right here, and that's why I have the blue channel on right here, just to have a stop loss on there. So, if you got in this trade and I was holding it up to right over there, obviously that didn't work out, came down for a slight loss where we've gotten out right there for it. But if you use it for other ones, like using it right there, and right there, we can see price came. I guess you could have entered right there, but it'd be safer wait until that one right there. Then price took off after it closed above the green. Price took off and then went all the way up here and hit the white line to get out of it right there. So that's how that trade setup works. And so moving down right now, since we don't have the red on there, we don't have anywhere else to go. So all we could do is look for, see the red one right here, there's a yellow one right here, and then just draw that. And all we're waiting for is to see if price is eventually going to keep a low somewhere. Saying this one's going to be the low right here. Looking for price to break above the green right there. Not break, but close above the green right there. And then once it does that, that'd be the entry. And then the target exit would be the white line up right here. And then the stop loss for that trade would be just below the blue line right there for it. So that is how that trade works. Now this trade isn't a current setup right here, and it really doesn't show anything as far as the future of the price prediction where I'm looking for this to go. So like I said a little bit ago, looking for at least down to 3350.50 with potential for it to move further lower. And then here in the weekly chart, if the red, if this turns to a red semaphore up here and the 50 EMA crosses the 200 EMA, then we're looking for an even lower move. Now moving over to the daily chart right here, we do have a 50 EMA crossover as well to it, and we do have the red semaphore. So as you can see, where the red EMA crosses over, it would have been about right there on that candle, let's say. And then we still had, price is still taking a good move down, come up here a little bit more, but then is now keep moving it down. So that's why price continues to do a push lower after a red one forms and we have the crossover of the EMA. So we're looking for, again, still down to that 3350-ish area from it, but that's how that one works. And then let me just show you how the inside pitchfork one would work. So we just start right up here with the red one, there at the yellow, there was right there. So this is going to be a short trade. Price closes below the green right here and takes it down right here to the exit, no problem. Then we got a couple other ways we can measure it. We can either do this way, using still the red one up here and these yellow ones right here. Price closes below right here. That'd be the entry for it. Goes back against this a little bit, but never goes north of the blue line right there, so it's still in the trade. Then comes back out and just yesterday hits that target right down there. Then other ways you can do it using the yellows. There's a yellow, 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 same sort of thing. Price came down, broke below it, retraced a little bit, and it actually hit perfectly off the 200 EMA, but you can't count on that. And then came down here and hit the 1.618. So that is the S&P 500 kind of price prediction. Not some huge revelation. All I have right now is looking for price down at least to 33.54 and 50 in the S&P 500, with potential for it to move lower. And then here in the weekly chart right here, if we do get the red EMA to eventually cross over the blue, and the red Semaphore forms up top here, which it eventually will, and the red EMA crosses the blue, then we'll look for either an even further move down here to the downside. Moving over to the weekly chart, it really doesn't have anything we can use on it right here. It has a couple of the yellow semaphores. You see, we could use that, and that. But as you can see, look at this right here. Price closed above it right there. Went up there and hit the top at the 1.618. So that trade is done there in the monthly S&P. So until price hits, and that's a real short one, so that wasn't even any good anyways, but not much going on there. But anyways, that's S&P 500. That's the price target I'm looking for it here in the near future. So definitely looking for still movement down with potential if price continues to move down. And then here in the weekly chart, the red EMA crosses the blue, then we could look for an even bigger push down here, well into the mid 2000s, that sort of thing for it. But for right now, we're looking forward back to where the pre-COVID highs were right there, is at least price coming back down to there for it. So that's it. Take care. Bye.